listen, the talk that I'm going to deliver has to do with tax exemptions. Okay? We talked a little bit, we touched a little on the subject, and we're going to be repeating some of the information now that we touched on this morning, but we're going to expand on it a little bit. Now, we don't have a PowerPoint for this because for some reason we were having technical difficulties with it, but remember, this is being recorded, okay? So the information is something you'll be able to avail yourself with, all right? Or avail yourself of. So, what are the ways to get tax exemptions in the DR? First of all, the DR has a benefit. Taxes in the Dominican Republic are territorial. What this means is they tax you on what you earn here. They ain't doing none of this about following you everywhere, and whatever you make in XO country, you got to pay for here. They're not into that. Their taxes are territorial. So you're going to be taxed on what you produce in the country, okay? Now, even though it is said that, theoretically, because I want to point something out here. You have theoretical law and you have what's put into practice. You follow me? You're going to see that a lot in the DR. So what is theoretically applicable? Theoretically, once you live in a country 182 days, you become a tax resident. So the country has a right to tax you on income. And that includes foreign income. I haven't seen it, and I've been here for 17 years, so you do the math. I mean, I don't know if I should say this in the conference, but the biggest tax evaders are Dominicans, folks. They have their hands full. They coming down on companies here, okay? So that is their main priority. They can't be worried about no foreigners that aren't, making money out whatever country they're from. That's not their priority here. So, but whatever you earn in the country is taxable, all right? Now, what you pay in taxes is going to depend upon what you earn. As an individual, or a foreign company, you're liable for 10% net taxable income. If you're a company, I believe it's up to 27% net taxable income. That's income that's taxable after deductions. So having a good accountant, key. Okay? Shame that Vasquez is in the U.S., the messenger of death. That's what we're calling him. But anyway, he didn't hear me. Anyway, the thing is, so in the DR, we want to talk about tax exemptions. Okay, we talked a little bit about how taxes are structured, how taxes are, who taxes apply to. But now, this morning we talked about those who obtain residency, particularly residency through the investment program. Okay, you are tax exempt from any and all taxes, earned income. Earned income, because there are tax exemptions that come to you automatically, but earned income for 3 years. So for 3 years, your investment starts to do well, can't be touched. That's the rule. That's incentive number one. Those that have residency through the investment program also are exonerated from paying a transfer tax when you buy a property. What is that transfer tax? 3% of the worth of the property. Now that doesn't seem like much, but go out and buy a property that costs $300,000-$400,000. 3% of that is what you have to pay in taxes in order to transfer the title to your name. But if you have residency under the investment program, you are exonerated from having to pay that tax. All right? What else are you exonerated from when you have residency through the investment program? You are exonerated from having to pay property tax. Now, if you own a property, they gave it to you in pesos this morning, I'm giving it to you in dollars now. $150,000 or more, you're liable to pay 1% property tax annually. However, if you have residency under the investment program, it doesn't apply for 3 years, and when it comes into effect, cut that by half. And you can make that in 2 payments. Okay? The other tax you're exonerated from is the import tax, which can be very hefty. And I gotta tell you, I don't know which is worse, the IRS or, customs. They are nasty customs. They really don't play with their money. So, if you have residency under the investment, but caveat, there is a caveat. Even though you have residency through the investment program, if you have resided in the country 6 months and a day, you don't get the exoneration. And now that doesn't have anything to do with immigration incentive law. That has to do with customs law. Customs is like, okay, they get the exoneration if they have this form of residency, but if they've lived here 6 months and a day, you're out. So, what's the key if you want to import a container? You want to make sure that A, you have your residency, and B, it's before you've lived here for 6 months. So keep that schedule in your head, all right? Also, the import of a vehicle. Import taxes are expensive in this country. I'm not going to, they're very expensive, especially for a vehicle. A lot of people, but then buying a vehicle could be expensive because it's imported. Got to make their money back. So,
is it like 30%?
Just about 25 to 30. So, if you have residency through the investment program, you're going to pay 50% of the applicable transfer tax and or import tax.
So you break it half. Right?
Yeah, you get 50%, correct. Okay? And as we said, you could bring your personal effects duty free. Okay? And your investments can't be taxed because, if you have like investments in the bond market, if you have a high yield CD and you have a significant amount of money and now this starts to produce and you decided that you want to leave the principal and roll it over, but you want to take, the profits or that it has generated, the government is waiting to get that 10% right off the top. And it's automatic. So having that residency helps you. What other...
Did you mention that if you transfer money here from any other country, they take, 0.025% fee, the government, on every international transfer?
But that's the case in any country. Every country gets theirs off the top. Yeah. Any and all. And that has less to do with the foreigner and more to do with the financial institutions.
Another thing is, I know about containers, how people ship them. And, well, before the COVID crisis, whatever you want to call it, it was like $1,500 to ship from a container from Miami, let's say, to Costa Rica. I mean, just a container part, right? Mm-hmm. Now it's like $6,000 because they've got that gigantic, big one.
Yeah, things have gone up. So knowing that you have that umbrella of that residency is quite important. They don't even want to wait till the end. Well, I tell you, taxes brings it out in people, doesn't it? Go ahead, Russ.
But that's not taxes. That's just the way it is now.
No, everything has gone up because even the cost of vehicles after COVID is ridiculous. Staying at a hotel is part of what we talked about. The nightly rates at a hotel is just exorbitant. After COVID, it got materials to construct. It's everything has gone up by a lot. So, you want to make sure that if there is anything that could get you under some type of umbrella that brings you a break, you want to take advantage of it. And residency is one of them. Now, everybody's looking to buy property, which is the favorite investment. And rightfully so. Owning property is always a smart thing to do. It's a solid investment. Lowest risk, by the way. So, Confotur. What is Confotur? Confotur is a certification provided by the Ministry of Tourism to foster tourism. They want investors. So how does this work? Well, if someone like, say, Patrick is doing a project, so this is not going to apply if you want to buy an individual unit. Oh, I want to get Confotur for this. No. The Ministry of Tourism only provides Confotur certificates or exonerations for big projects. And usually they're in tourist towns, okay? Because that's where the majority of, the tourists go. And that's what they want to do. They want to help these projects, get up off the ground, provide them incentives to attract investors to buy. Okay? And obviously these people are going to rent, and, it just fosters tourism that at the end of the day, is good for the economy. So, Confotur, like these projects, he was talking about, Patrick, and you folks were talking about how you're building these projects. So what happens is a file is prepared wherein all the paperwork is submitted to the Ministry of Tourism. And once they're satisfied with everything provided, the land, the permits, and the design, they now approve Confotur certification. So what does that mean? That means tax exemptions clear across the board on that property. Now, they talked about the transfer tax. And the good thing about Confotur, by the way, could go anywhere from 10 to 15 years. Okay, under this exoneration. Okay, so besides the transfer tax that you're exempt from, you're also exempt from property tax, the one we just talked about, the 1%. You're exempt from paying taxes on the revenue that is generated by this property. Okay? You are exonerated from, what is it that they give you an exoneration if you have to remodel the unit, let's just say, because remember it's 15 years. And under the 15 years, it's under, it's under that umbrella. Okay? You were going to say something, Russ? I'm sorry.
No, my question was, is there a difference? So let's say if I wanted to buy a property, and instead of buying it in my name, Rusty Taylor, I wanted to purchase it in my business name. Is there a difference in how much I would pay on the taxes of the property in the business?
Yep. You just went from 1% to 3.5%.
On property taxes?
For companies.
In which way?
Companies pay 3.5%. Individuals pay 1%. Mm-hmm. Oh, and here's another fun fact. So, if a company buys a property, the worth of that property is absorbed into the capital of the company. So if you went out and had 100,000 pesos, which is what, like $1,500, and that's how you registered the company with that capital, but you bought a unit for 200,000, you just created, a capital in your company of 200 and what is it? 200 and what did I say? $15,000. Why is this significant? Because companies have to pay taxes based upon that. So that capital that you have in the company is going to affect your tax bracket for that company. So if you have a holding company that you just have for purposes of, transacting, or some people register a company to get, residency or whatever, but you buy a property and put in the name of the company, yep. The company, that constitutes the capital. It is absorbed, and you will pay taxes based on that. So a lot of people always feel that for liability purposes, they want to put properties in the name of the company. Think about it.
But there's more than one type of company.
Of course, there are.
For the average person, not big corporate
Yeah, there are. You have SRL, EIRL.
Is there a tax system for that for each one?
Well, okay, we're not talking about that, but I'll get into it briefly. An EIRL is a company owned by an individual. So their capital can be like 10,000 pesos, right? Thing is that this is a small company owned by an individual, so it is understood or expected that, the earnings of that company won't be too high. But for instance, if that company earns, let's say, 2 million pesos or more, what happens is that they're going to prorate their future taxes, not based on what they earn, but on what was earned on the highest year, because of the limits that are placed on that type of corporation. Okay? So that's how their taxes are going to be calculated until proven otherwise. The most common one is an SRL, which is the equivalent of an LLC. That's what most people do, an SRL. Okay? And so, right. And by the way, when you register a company of any sort, lately, if you go too long without using the company or, filing for taxes or doing any type of movement, they'll just cancel your tax ID number. So it's very important that if you have a company, even though you're not using it, Elizabeth talked about, the merchant certificate, el registro mercantil. You have to have that up to date. Otherwise, you're going to go do a transaction and find that your tax ID number, the RNC, has been canceled. Okay? Then you got to go to a process to reactivate it. Another tax exemption, capital gains. No capital gains on Confotur property. Okay? So, I strongly suggest, if you do not have residency, what you mean 10 minutes? I just started talking. You see that? Okay, so I strongly suggest that if you do not have residency that will get you out of these, taxes, then you can go ahead and find something that has Confotur. Okay? Other tax exonerations, free trade zones, if you invest in that, you're tax exempt. One thing that's becoming a favorite is entering what is known as a public-private alliance with the Dominican state. And basically what that is the state has several projects. You heard Luis Abinader talk about several projects. And they open the door for private funding from foreign investors. So you come in and say, you know what? I want to invest in this particular project. Well, your return on that is a list of benefits. Okay? You enter into an alliance with the Dominican state. So it depends on the kind of alliance you enter. You could get a return. You're expecting, you're investing to get, 6-7% return, because they're not very high. But most people who do that are doing it for the benefits. And the number one benefit of getting into that type of arrangement, a public-private alliance with the Dominican state, is taxes, folks. Taxes, expedited residency, you name it. Oh, they have questions. I should open up to questions. It's about, I only have 10 minutes. He's going to come and kick me out of here. Russell, and then you.
What's the threshold of investment to do that?
There is no threshold. Right now, I'm going to let you in on a little secret, which I shouldn't, because this is going to be public. But I'm going to give you a for instance. There are military projects. We're currently working on those, where they're trying to, it's going to be kind of like a farming facilities that are overseen by the military in the border towns to Haiti. That's all going to be military. And it's something that the Ministry of Defense is looking to finance, through this type of alliance. And nothing's been set in stone, but you could go in with, like $30,000, $40,000. Okay? So that's something they're currently working out. But it's not like the Center of Investment and Exportation. The Center of Investment and Exportation. And I'm going to give you another little nugget that not a lot of people know. Used to be that for them to provide benefits based on an investment to the state, or that benefited the Dominican state, it had to be $200,000. $200,000 US dollars. Not anymore. Now it turns out that you can register a company, right? And that company could be with the minimal amount of capital. But you open a corporate account for it. And you transfer funds into that account. Could be like $5,000, $2,000. And they'll certify it. Now, why is that important? Not so much for the tax break, but if you did not qualify for any type of residency, that gets you in the door. And you're registered with the state as having made an investment in the country. So I said before, the Dominican state is starting to want to make efforts to attract you to the country. So they're opening doors, folks. They're becoming more flexible in their application of the laws. And he doesn't even stay to hear it. He just comes in to say, get out in 5 minutes. You see that? He's going to get it. You're going to get it, little man. But anyway, so the Dominican state is looking to attract you guys. So they want to open the door. Because an investment is no longer hundreds of thousands of dollars. It could be a multitude of people investing 20, 30, 40,000. They're starting to understand that. And so they're opening the door and making it easier for you to come to the country. See, years ago, investors were multinational companies. That definition has changed. These are the investors, right here. People who open accounts, people who get residency, people who transact money. Have you ever noticed that a person could not have money in the bank, but when you start to tally up all of the bank movements, they're rich and they don't even know it. Have you seen that? And then you get the statement and it says, oh, this month you've moved about, I don't know, $50,000, $40,000, $30,000. You're like, from where? That's a mistake, but you did. Moving money. It's no longer about how much you have in the account. Moving money. And that's what keeps an economy going. And people, the DR has caught on to that. Okay? So they've started to, come down on their requirements. They've started to become more flexible about how they interpret the law. And they're putting a lot more incentives into play. That's why the YouTube channel is important, because it's going to start keeping you up to date as to all the novelties coming up. Okay? So I can only say you're in the right place at the right time. Strike while the iron's hot. That's what I say. Okay? Any questions for me?
Confotur law, you say only for big projects. So if you have a piece of land and you want to build a house near a beach, so it's a tourist area, you still want to qualify?
No. It's only provided for big projects that sell off, villas, units. Yeah. Anything else? Yes. And Confotur, by the way, it's a lot like what happened with the incentive, the Dominican incentive law for immigration. That residency under the investment program only used to apply to people that invested $200,000 or more, or multinational companies. As of 2007, they opened the door to individuals that earn $1,500 a month or, $2,000 a month passive income. Same thing happened with Confotur. Confotur was an incentive for hotels, resorts. And now they're opening that up to projects that are not hotels, but in a way have the same framework, because it's rented, it has common areas, right? It could have a restaurant, a common pool. So it's not a hotel per se, but it follows the model type of a hotel. It's still for purposes of rental and attracting foreigners. It becomes, a tourist site. So, in that respect, you can see how the DR is starting to refine, their view of things. So it's good to take advantage of that, especially now after COVID. They're understanding more than ever the value of the foreign presence in the country. And when I say presence, I don't mean living here, because you don't have to live here to hold residency status, to buy property. Presence meaning represented bank accounts, okay, properties, residency status. That is a presence even though you're physically not here. So listen, right now, guys, sky's the limit. All depends how far you want to go, okay? So if you have no more questions, Russell's dying to get up here. There you go.
Following the same question that you have, how much more the project has to be? Or they have any specific amount they have to go by?
There's not a specific amount. It has to be a project that is, of considerable size. That's for their office to determine. Because, for example, you could have something like what we saw Villa Altea. It has 11 villas. It may seem like a small project, but it's all about the generating potential. So I'm leaving.